All right. Well, good morning. Welcome to the call. Good morning. All right. Okay. Big stuff is happening. All right. So first thing I want to do, let's do this real quick. All right. Here we go. Welcome to Wealth Wednesday. Happy to have you all here. Another beautiful day. Let's get to work. For those of you who don't have complete and utter control over what you click on, which I'd be ashamed if you don't. These things have been chemically engineered to hijack your brain. YouTube is a valuable resource for finding stuff. And one focus tool I found is something called Unhook. Unhook. Use Unhook to hide everything. You can turn it off and all the stuff. Turn it on, no stuff. And that way, when you come to things like, I'm just here to check out the Renatus channel, I wanted to see that live stream with Bill Predabon. What's cool about this feature is there's no suggestions down here. There's nothing trying to pop up to take my attention away. It says 0 comments because I have the comments thing also turned off on this. Oh, no, I don't. No comments. Okay. Anyway, Unhook Chrome extension. I recommend it. Staying focused. We talked about the one on Facebook. Keep
Welcome everybody to episode 5 of the Renatus Invest Edge series.
There it is. Okay, so I'll drop this in the chat. This Chrome extension for you all to use. We don't want to live on the computer. While we're on the computer, we want to be as productive as possible. So we need to have all the tools available. Yes, Deborah, it's a Chrome extension. You just install it and then make sure you keep it up with your extensions up here and then just turn it on. You betcha. Anyway, big shout out to Bill. Thanks for Bill coming on and making a great training. Just keeps getting better. Excited to see his full-on class. And that we got the front page now completely updated. Want to give a big shout out to Richard Stock's team. I know we pointed this out yesterday, but some of you weren't here. We're going to look at the top 10 real quick. Just real quick, top 10. This is number 1 guy's on Richard's team. This guy's on Richard's team. Scott's team, Richard's 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 team. So the reason I'm pointing that out is because Richard is doing an ATM training, advanced training for marketers. Over the next 5 weeks, he's going to be training how to make cash combo sales, how to drive your business to success, how to have your most profitable month ever, especially leading up to nationals. And if you want to participate with what he's doing, then it's not too late. Go to Facebook, ATM Success. Right here, this group, request to be added to the group, and then Richard will be able to add you on and give you the necessary registration stuff. And right now there's 500 something people here, 571. So they're doing something right. This is the recommended reading for the week. It's a small book. You can get it done in 1 to 2 hours. So anyway, take advantage of what he's offering there, because obviously he's got a track record of success and knows what he's doing. He's made a couple $1,000,000 doing it. Okay, awesome. I just saw this update. Just want to click on a few buttons, see how it comes through. Oh, it takes me right to the calendar. Look at that. Check this out too. This link do what it's supposed to do. 62. $44 days. I wonder if we could get this countdown added on the home page. That'd be kind of cool to have like a little countdown timer thing right here. Okay. Anyway. Grab this here. Questions. Yes, the Learning Blocks class with Cosmo and I is happening today at 4 p.m. Mountain Time. Also, Facebook is a distraction for you. There's something called the Newsfeed Eradicator. Yep. Cosmo and I are going to be doing a Learning Blocks class, because we know that a lot of people have a huge desire to learn more, but I've heard people say they go through a training and nothing sticks. It's not because of the training, it's because of how you are organizing your brain. Okay, so I'm gonna have to get these people some recordings. I don't know if we're doing a recording. I'm gonna have to ask Cosmo about that, because part of it is interaction, knowing your goals and stuff. Anyway, register here. I got this nice long thing, but also everyone knows what TLDR is. Too long, didn't read. So if that's you and you want to just understand, learn how your brain likes to learn more, earn more. Excuse me. That is the premise of this entire thing. And Cosmo learned English in 12 days and gave a 4-day lecture in English after that, and has continued to skyrocket his business. And then once I met him and got him involved in Renatus, he started doing more real estate. He never even considered real estate investing. But when I showed him what we're up to in the Renatus world, he was like, wait a minute. I can combine what I know with what you guys can teach me. And now he's got short-term rentals, long-term rentals. He's buying an apartment building. He's done some fix and flips, some lending. He's rearranged his taxes, his legal, all because of us. And then he started selling the program too. He's about to hit $100,000 in Renatus commissions for enrolling new members. So anyway, come spend the afternoon with us. Learn how to learn, not just what to learn. And if you know someone who isn't involved in Renatus, but you think would be a good, would benefit greatly from it, then put them in here, fill out the form, drop my name in it, and we'll take care of them. Sweet. Sweet. Yep. So really excited about this. Okay, so the early bird discount is coming up in just over 2 weeks. So save yourself some money. You know what some people are going to be doing? Good morning, everybody. Welcome who just joined. Welcome, welcome. Um, making a Facebook page that's just about nationals. You could do that as an ICM, independent contracted marketer. It's in your agreement. You're allowed to make stuff like that. You're allowed to make websites and promo stuff that directs people to our events. So take this information and make a Facebook page about it. Make a meetup about it. And, obviously, the closer people are to northern Utah, the easier it'll be for them to attend in person. So, make sure you're being location aware, since we're not going to be live broadcasting this. Yep, there were plenty of pros and cons about it, and Mr. Snyder said, if you want the value, get your butt there. Front and center. Okay, and there's Pat's number. If you need to buy a ticket, she'll sell it to you. Good morning, good morning, good morning. Okay. So come get registered here in the Helios calendar. And you know what I've seen a lot of people do, especially outside of Utah, is they'll say, hey, if you buy an education package from me, I'll buy your nationals ticket, I'll buy your airline ticket, and I'll get you a hotel for 2 nights. Right? Because the event is 3 days, 2 nights. Maybe you do 3 nights if you're kind. But you add that up. Ticket's $400. An airline ticket, depending on how and when you fly, could be, let's say, 500, $600. So now we're at $1,000. And then the hotel is, I think, $150 a night after fees and everything. So 3 nights would be another 500. So now you're at $1,500 as a promo discount for, in investing in your new client, your new customer. And what a gesture. And I've done that before. I've bought people laptops. I bought people suits. Someone wants to start coming to a business workshop and they don't have any of the right clothing. Well, guys, it's a lot easier. Let's go get some suits, iPads, and then of course nationals tickets, airline tickets. I even did for a while I was doing airline tickets to Hawaii because that was super cheap. And we have a Renatus community out there. So when you go travel, you could make it a tax write-off. My point is to sweeten the pot for your customers for these next 45 days. Buy a combo from me, come to nationals for free. And maybe give them, the sooner you register, like I was saying, you want to get the shirt, the banquet, the swag bag, all the cool stuff. You need to get that done by March 10th. Okay, March 10th for that. But then you'll be paying full price, so just buy your ticket now. And we are seeing a flood of tickets coming in, especially from last week to now. And so anyway, excited to see you all there. I'm working on my speech. I get a speaking slot. Can you believe that? There I am, hiding in the background. No, just kidding. Someone already sent me a text this morning making fun of me for this little. All good. I'm happy to be on stage with these beautiful, talented people. Awesome to see. Yeah, peeking from behind. Yoo-hoo. Okay, and I know Daine just joined us, so welcome. And Daine was one of the first people to take this Genius in 21 Days workshop with us back in the mess of the pandy, back in 2020. He was right there with us, sharpening his skills, learning how to learn, not what to learn. And so anyway, you're all invited. Please register, and let's make the best of it this afternoon. Awesome. All right. Well, speaking of Mr. Daine Clark, And I was looking at our YouTube channel, and his video is already up to, I think, 600 views now, which is one of the highest. 620 views. So Daine, well done. Folks, remember, it's your job to share these too. 620 views. Let's get it up to 1,000 by the end of the week. That way we know you're sharing it and you're getting more people out there. Umair's got 1.5K. Of course, the first one usually gets the most. All right, before I turn it over to Snyder, I want to do a quick survey. Because I was thinking, what is a way we can improve the Invest Edge? It's already awesome, but of course, you know, we're out here trying to improve things. By the way, this is my Renatus Collector's Edition Nationals t-shirt 2017. I have one from every year, so register early and get your shirt added to the collection. Okay, my question is, how many of you would like a market update section by Bob Snyder? I'm pressuring him, in case you guys can't tell. So I've already pressured him. Now, if I say, hey, a bunch of people on my morning call said they want it, now you have to do it. No, I'm just kidding. But I will be telling him. But you know, we get the announcements, we get the training, but I was also thinking, like, what's Bob's perspective on the latest news headlines about real estate, lending, markets, buyers, sellers, you know, just what's happening. I want Bob's take on it. That's one of the privileges we get with being on PAC in the morning. He shares some latest and greatest stuff that he hears, and just hearing him digest news headlines, articles, and people's announcements and his take on it has really expanded my mind. And I thought, well, what if we brought that to the Invest Edge as well? And I don't really see any downside to it. Of course, he's got to work a little bit more to prepare a little bit extra. Yeah, without being political about it, exactly, Anthony. Politics aside, just looking at the policies, what's good about this Fed meeting? What's good about this trend? You know, and you see Texas is doing that, North Carolina is doing that. Just you know, broad strokes, but just hearing him digest it, because you know the guy's worth tens of millions of dollars in real estate. He thinks a little bit different than most. So anyway, he doesn't share enough. I'll let him know. Interesting. It's not called exporting, Anthony. It's repatriation. I think that's the word for it. Anyway. Oh, goodness. Words mean things. Okay. Great to see you all. Happy you're all here. Yep. Yep. Amazing. Okay. Well, Mr. Daine Clark, we're happy to have you. Wealth Wednesday, another beautiful one, February 5th, 2025. That's the only one we got. Let's make the best of it. And for those of you who are new to the call or catching the recording, Mr. Daine Clark has been a part of our organization for 9 years now. He has surpassed every goal that he has set. At first, he was one of those guys saying, I don't want to do the marketing. I barely want to do the real estate. It's mostly my wife that wants me to do it. I just want to be safe, secure, provide for my family. And when he came to the first meeting, he was invited by a warm market friend. It wasn't some fancy cold marketing campaign. His friend just called him and said, I'm doing it, come and look. Which that method absolutely works. So if you haven't called a friend this week to say, I'm doing it, come and look, here's your clue. Anyway, Daine jumped in to the meeting, sat there for a couple hours and thought, should I? But then his wife said, yes, not only should you, you must. He set a goal to do 2 fix and flips in his first year, or I think it was a rental, do 2 deals in his first year, and then just do 1 deal a year after that. In 10 years, he'll have 10 properties. He'll be out of the rat race. Little did he know his dreams and goals were going to be shattered, destroyed, unrecognizable, because he started doing a deal a quarter. And people were coming up to him, how are you doing this? And he started doing some marketing. He hit 100,000. Then he hit the 250. Then he just passed the $500,000 mark in marketing. He's like, wow, these people want to know, want to know. He started doing a deal a month, another one, a deal a month, a deal a month, a deal a month. And now he is on average doing one deal a week. And he only works 3 days a week, folks. So it's incredible to see what happens when you apply your knowledge, you use the techniques, you go fearlessly forward into your better future. And you'll see all the people around you start to benefit, not just your friends, not just your family, but entire neighborhoods now benefit from people like you and me and Deborah and Scott and Ada and Tamara being real estate investors, being business owners in our communities, the positive ripple effect that happens from that. So it's not just make money, it's your duty to apply this great business knowledge and ethical economics that you're learning here out in the world and be a good example to people, just like Daine has been. And we're happy to have him here to hear some insights on marketing, real estate, negotiations, numbers. So let's give a big warm welcome to our guest, our man with the most, Mr. Daine Clark. Good morning.
What's up, guys?
Welcome.
Happy Wednesday to you.
Yeah, thanks for being here.
But yes, super exciting, and I think that'd be a good thing to talk a little bit about the market. I will say that it's interesting because there are so many different pockets of things that are going on that will affect one category of real estate in a positive way that, or vice versa, might affect real estate in a negative way, or it might affect residential positively or negatively, and then commercial positively or negative. And we saw that. We saw that even through like 2020. And I almost feel like that kind of, I mean, that I feel like that kind of stuff's been around for a while, where certain pockets of real estate are thriving, and then it's more challenging for others. I will say through like, let's say 2016 to 20, let's see, probably like 2022. Well, I don't know, because even in 2020, like commercial real estate got like obliterated. So let's say like 2016 to 2020, like just everything was going up. Everything was on fire. 2020 hit and residential went on fire even more, and commercial kind of fell through the bottom. But anyway, might be interesting to hear from multiple different people to say, oh, like this pocket is doing well, this pocket is maybe not, becoming more challenging, I should say. But anyway, I vote yes. Sounds like a good idea. Ah, that's interesting, Tamara. Bob shares his own, or sorry, Bob lets other people share their insight all the time, but he rarely shares his own.
Okay, well, I'll be sure to pass that on and maybe we get that news section, headlines, update, something like that added. Just 5 minutes. Doesn't need to be long, but yeah, that'd be awesome.
And every time he shares, it's like incredible value. So like I was like, why isn't he talking more to everyone?
Nice.
Yeah. Yeah, every time I get a chance to talk to Bob, I'm asking him like, "Hey, what are you doing?" I remember asking through like the 2020 where he's like, I'm gonna hold out for just a second and not buying anything, not selling anything. I remember him talking about that, and then he's like, "Oh, I'm gonna sell some stuff or gonna buy some stuff." And so every chance I get, I was always asking him like, "Hey, what are you doing right now? You sitting tight, holding money?" Or I remember one he was sharing that he was capitalizing, and so he's like, yeah, like I'm gonna pool some capital first for right now, and then kind of see what happens. But anyway, I think it'd be a great idea.
Okay, cool. Well, I'll do my best. He's actually in Europe right now doing some worldwide investing. So it'll be exciting to hear on Monday
Nice.
what he's learned.
Nice.
Cool. So tell us, what's your latest deal and what insight has that brought you?
Let's see. I just bought, and I'm hoping, crossing fingers, we close this week on, I call it phase two, um, but let's see. I just ran into somebody who they were. Let's see. Let me make sure I get my story straight here. Um, oh, just kidding. We bought 3 houses since this story that I'm thinking. Anyway, I'll tell this story though. So I had somebody who, and sorry if I already told this one, but I had somebody who they were trying to sell their house. They were under contract to sell their house. They'd been on the market for a little while, and everything was going good. Due diligence, appraisal came back just fine. Like everything looked great. And then last minute, the buyer had their loan officer say, "Sorry, can't help you." And I didn't know anybody associated to the buyer, anything like that, other than the seller. So I knew the seller, and the seller just knew that I had a track record for swooping in times like these and helping them out, because in this situation, they were only buying the house for like 370,000. And I can share numbers if you guys like, but they're buying the house for 370,000, and they had like $125,000 down, I think it was. And he knew that just by, he had a REPSI, he had a purchase contract in his possession, and saw, oh yeah, they're putting a bunch of money down. Anyway, so that all happened, and last minute the loan officer was like, "Sorry, can't help you." And so the seller called me and said, "Hey, Daine, I'm selling my house. I really don't want to have to put this back on the market and and find a new buyer, new due diligence, new appraisal, new, like," he's like, "I don't want to start over." And he says, "Can you help me just close this? These guys have a bunch of money down. Can you just do it for them?" And I was like, off the top of my head, yeah, like that. 370,000, 125,000 down. Yes. Taking me about 4 seconds to say yes to those kind of numbers. And anyway, so I ended up coming in. I purchased the house from the seller, immediately had a purchase contract, or I should say I had the purchase contract assigned to me. So before I bought it, they assigned the contract to me to buy for the 370,000, and then I immediately filled out a real estate purchase contract to sell to the person who wanted to buy it originally. And we basically did that all like simultaneously. Assigned to me, and then I filled out a purchase contract to sell to them in 2 phases. Because in this case, there's no remodel needing done on the house. In fact, the house was already remodeled. It was in great condition. And so I was gonna buy it cash because they wanted to close. He was like, "We should have closed like a week ago." And so I bought it cash, and now I'm in what I call phase two, and I'm currently refinancing the house to pull all my cash back out so that I can go buy another one, for example. And yeah, so hopefully on phase two, let's call it the refinance portion, we got all the conditional, what do they call that? Conditional approvals, or the conditions. We got all our conditions sent into underwriting, just waiting on that final clear to close. And so expecting it, I mean, it's Wednesday, but expecting it hopefully this week. And so we shall see. But yeah, great deal. Cash flow, I can't remember what it's going to be on this one, where they put so darn much money down. Typically cash flow is a little bit lower on a deal like this. Yeah, let's see. Burr method. And here, I'll just share my screen actually. Share.
Daine, what's the least you take down?
I typically don't like to do anything less than 20%. Now that's after I've done this for years. I used to do them with 10% down. I used to do them with 15% down. But I guess I'm to the point in my life where I'm just like, I'm only going to do the best deals. And so I do a minimum of 20% down. And so I've been messing with this, and so it might be a little bit here. Let's see. Partner. Okay, yeah. Oh yeah, I think I must have been doing a training or something like that on this. And so, in fact, sorry if I did this training on
Why did the bank
last week.
reject the buyer?
I believe it was, I didn't get the exact details, but I believe it was taxes. They are business owners and didn't have the taxes. And I've been finding that a lot more lately, where they go all the way to like the final hour, like ready to close and say, yeah, we're good. Yeah, we're good. And then the last minute they're like, sorry, can't help you. And so they end up just having to back out. And so yeah, I can already see that. So I just got quoted, or we locked the interest rate, I should say, at 7.125 on that. And so that's going to be a little bit different there. All right, let's take a look at this. All right, so I bought for 339, and so 370 was what they bought for, and I told the seller, I said, hey, I have to have a spread, and so that either comes from buyer or seller, either one, whether the buyer increases their purchase price or the seller decreases their sell price. And so they were already under contract to buy it for 370, and so the seller was like, I'll just take the hit. And he's like, I just want this gone. And so 339 was what was my purchase. I financed from hard money 224. I don't have to do any remodel because, like I said, I bought it and sold it the same day I bought it. And they brought $125,000 down, and it just appraised for technically 371,000. I was expecting it to be 370, but yeah, so it looks like I didn't even change this because 1,000 would you do. So I'm getting a loan for 214, paying, my refinance costs and whatnot. I'm already collecting payments on it. In fact, their first payment is due this month. And in fact, they've probably already paid. And so all said and done, I will be out of pocket probably around $10,000 out of my pocket. I probably could refinance more if I wanted, or I could have refinanced less and been whatever, but I just figured, hey, I'll just leave it like this. So total all settled in, I will be out of pocket $10,000, and cash flowing, now that I just locked the rate in at 7.125, I'll cash flow $596 a month. So cash on cash return, basically 10,000 in, and here, let's change this to yearly. So $10,000 in, $7,000 out per year. And so that is a 68.5% cash on cash return. And my loan to value, this is one thing I really like about a deal like this. My loan to value is 57.8%. So uber safe, if you will. Very, very good loan to value. And not, I never like to say, and I never like to say, I pray that I pray at night that they stop making their payments, because obviously nobody wants that, or hopefully nobody wants that. But let's say they stopped making their payments out of spite or whatever. We're just like, stick it to you, Daine. If that was ever their mindset, I would not say that I was upset, if you will. Obviously, and like I said, I've done over 300 deals in similar fashion, and I've only foreclosed on one, and that person deserved it. But yeah, if these guys wanted to stick it to me, quote unquote, I wouldn't complain. But let's say they did fall on harder times and said, hey, we can't make the payment. I say, all right, let's figure out how to sell it. Let's do something, and let's help you out. Let's get out from under this, needing to make this payment. I don't want to foreclose. We've got plenty of room here to figure something out, from a lot of different. I mean, at this kind of loan to value, I have a lot of options. Could try and seller finance it again and be like, hey, we'll seller finance it again, and maybe you can cash flow some. I've done stuff like that before. But anyway, so 57, and this is my favorite. This is why I call this my signature deal, because literally all in one, bought it, sold it for more, got 125,000 down. So my loan to value is extremely low. I could not have been in this house had I done like a Burr method. You know, if you guys are familiar with the BRRRR, yeah, 4 R's: buy, rehab, rent, refinance, repeat. I couldn't have been in this deal this good had I bought a piece of junk house and fixed it up. I couldn't have been in this deal as good as if I was going to flip this house. Let's say I bought this house and was going to flip it. I wouldn't be in a loan to value of 57%. Typically, I can get in, a good fix and flip. I can be in like 85% at the end of the day. Between 80 and 85 in my area at least. And still making, in those cases, still making, $30,000-$40,000 on the fix and flip side. And so I look at this like all in one on the same day, bought, sold, now refinancing, loan to value, amazing. Like my upside potential is huge. My risk is super low. And I've never seen this house. I never will. Never even looked at it. I drove by on Google Maps, or what do they call that? Google Drive By, whatever that thing is called, just to make sure that it existed. And I did see the appraisal, which had pictures. And so also confirmed that the house existed, and then wired the money in, bought the house. And so, whoops. And so, so yeah, great little deal. I typically don't like doing cash flow less than 500. So this one's on the lower end of cash flow, yes. But like I said, loan to value, screaming amazing. And cash on cash return, amazing. And so just one more little one to add to the portfolio
Daine,
at the end of the day. Go ahead.
I'm finally ready to do this after picking your brain for a year on
It
this.
took me a year. I sat on this idea for a year. And I didn't have anybody to ask questions to. I just ran scenarios of, oh, what if I would have done this here? And just scenario after scenario, and never pulled the trigger. I kind of tried a couple of times, but just never pulled the trigger until a year after this had been like transpiring in my mind of how I wanted to. I guess I call it the Daine signature move. How I wanted to do this kind of a deal. And so yeah, 1 year later, I finally did one. So don't feel bad.
No, awesome. And I appreciate that. So I'm excited. I've been calling realtors that I know and mortgage people, and I'm like, yo, I'm ready for this. And I have a deal that's coming my way that I think it might
Nice.
work. So I'm there just finding the right, putting it all together. So 2 quick questions for you though. So when you're talking like that spread in the beginning that you get, can you talk a little bit more into how you create the spread? Because that. So I have a deal right now. The spread's just going to work, but how do you make them work with retail properties that are already on the market?
Yeah, so basically, like, how did I sell it to them for 370 and I buy it for 339?
Yes.
Okay, yeah. So in this case, let's see. So the person who knew me, the seller that knew me already, I had a previous conversation with him and said, hey, I told him a story because I know this person sells houses. He flips them really at the end of the day. And so I had talked to him and said, hey, and I told him a story about somebody that was trying to sell a house, had it listed, didn't have a buyer yet. And I said, hey, just check the box, seller financing. And if somebody wants to buy it, seller financing, hey, I want it seller financing, then you're going to call me. I'll buy it from you and sell it to them. Now, here's I hate to call it the catch, but here's one piece of information that you'll need to know is I don't buy it from you and sell it to them for the same price because I would lose money. Let's say I bought this for 370 and then sold it for 370 and paid all the fees and stuff, then at the end of the day, I would lose. If unless they paid it off over 30 years, I'm not sure when my break-even point would be, but if I were to guess, my break-even point would be 5 to 10 years down the road where I'd be like on ice, like hoping to don't sell the house because I'm going to lose money. And so I have to have that spread. And I told him that, you know, and this was years ago that this conversation took place. And so he already knew actually that I had to have my spread. And so him knowing that I had to have that spread, I think they were originally, in fact, you know, let me pull up the contract real fast. And here, let's see. Drive, refinancing deals, investor real estate purchase contract. Okay, yeah. So here, let's do this. Share my screen. So he had it under contract to sell at 370. Here, let's do this. Finder. And I might need to make this big so you guys can see this better. So if I go like this. So, and maybe one day we can talk about my organization. In fact, I think I have talked about this before. All right, so here is my purchase contract and an addendum 1 through 7 for me to buy. And so notice if I open this up like this, so here's the original purchase contract from the seller to the buyer. They were under contract for $355 to purchase. And so that was back in December last year. November. Okay. And so then let's see. So here's an addendum that had nothing to do with price. Purchase price will be $357. So then it changed to $357 on the date of 11/18. So originally, the first offer was 11/16 and then 11. Oh, you guys can't see that. Here, let me make this just a little bit bigger. There we go. So on 11, ooh, I didn't mean to make that huge like that. Yeah. All right, there we go. So just a couple days later, they changed the price to $357 on the 18th. So 2 days later, let's go to number 3, nothing to do with price on the 27th. Number 4, nothing to do with price, nothing to do with price. Okay, so here's where the conversation, so this is on December 19th. So they were getting ready to close because the original REPC, here, let's go back to the original REPC. Actually, no, let's see. Appraisal deadline, due diligence deadline. Okay, so original REPC closing deadline was December 19th. So this is when telling the story, this is when everything fell apart. They were supposed to close on the 19th and then bam, they couldn't. And so oh yeah, there's my name already. So on the 19th, when they were supposed to close, so I must have gotten called like maybe 1 or 2 days before this. So they said, okay, buyer is Daine Clark. So this was the assignment.
So on that point right there, you didn't have something earlier in the contract that said this contract is assignable.
Correct.
It was just in an addendum that says we are assigning this now and deal with it.
Correct. Yep. So we didn't do like an assignment contract or whatever, like a wholesale. We just talked to the seller and the buyer, obviously, and said, okay, transferring to Daine. So, all right, so this is where, and I actually didn't know that this had taken place yet, but my client, the seller, Gray's Investment, said he knew that I needed the spread. And so he said, hey, he went to the sellers and said, hey, I think I have an opportunity where you guys can buy it seller financing because someone will buy it from me and then he will sell it to you on seller finance. So basically you can get the house seller financing, but we have to increase the price because he knew that I had that conversation with him that the seller, let's just call him Tyler. Tyler knew that I needed the spread from our previous conversation. And so he's like, okay, let's just try and get the purchase price as high as possible. So he's like, we'll offer seller financing if you increase the price. They agreed to $370. And so he just, what's that? I'm not a head math person. 15. So he increased it by $15,000 because again, he knew that I needed the spread. And so 370, they're going to put 125,000 down. And so yeah, let's see, settlement December 23rd. Yeah, I remember when we closed like right around Christmas time, or maybe it was right after. But yeah, so Tyler was already building my spread, knowing that that's what would have to happen, and he was like, let's not even tell the buyers about Daine's spread. Like, let's just try and negotiate that purchase to 370. This is actually one of the first times I've ever done it like this, where my buyer had no idea of my spread. Typically, my buyer knows that they are going to have to pay for some of that spread most of the time. We can talk about that in a minute. But anyway, so 370, because Tyler knew that I was gonna hit him for, I shouldn't say hit him, but 370. If I divide that number by 1.1, I do 10%. That's 336. So I told him like, hey, I need 10%. On the very final hour, I guess the realtor was like, oh, like I want my commission too, and so they said, hey, well, hey Daine, can we twist your arm and do 9% spread? And I just said, sure. It was also the first time I've done that, but yeah, so that's why I ended up buying it for that odd number,
And point something
339.
out too in
Go ahead.
Daine's thinking, folks. He's not thinking 10% annual. He's not thinking 10% return that most people think of cash on cash returns in a 12-month period. He's saying per deal, per allocation of funds, 10%, which is totally
Correct.
different than what normies think out in the world about a treasury bond paying 5% or 6% or a CD. No, this is 10% per deal, not annualized. So
Correct.
anyway,
Yeah,
great stuff.
10% of the purchase price. So now, so then let's see, what was this day? So December 21st, we changed the LLC. So I make a brand new LLC, and I guess this is on public record now, but yeah, make a brand new LLC to buy this house, assign the contract from Daine Clark personally to the LLC that's brand new created, and I lower the purchase price because now the old buyers are nowhere near this contract. Now this is my contract that I own, if you will, because it was assigned to me, and so I can negotiate whatever I want. And so I then went under contract to sell this house for 370 with 125,000 down. And then now that I own this contract, I negotiated with the seller a discount from 370 down to 339. And so my company bought it for 339. And so tomorrow, that's the long answer, if you will, of how I built in my spread on this particular deal. I've actually never done one quite like this. This one's kind of unique to out of all the ones that I've done. So I guess that which tells me it doesn't matter how you get your spread. To me, it just matters that you get your spread. If you want it, obviously not everybody would, but I'm one of those that's like, I'm not doing this for free. I wish I just had gobs and gobs of money that I would just be like, yeah, let's just do this for free for funsies. But I definitely have to do this for profit. And so,
oh, sorry.
yeah, go ahead.
And the way I remember you explaining it, so like actually, so maybe you can clarify. So we can only get 4 mortgages in our personal name, if I remember correctly. So what
10.
you've been, what?
10.
10, yes.
10 Fannie Freddie.
Oh, 10.
10 Fannie Freddie backed. So 10, let's call it 10 government backed loans in your name.
So beyond that, are you getting I know you're partnering with
DSCR.
other people, and then you're getting DSCR. Okay,
Yeah.
perfect. Got it.
Yeah. So the way that I got past 10 the first time was credit partners. And so and I must have done that scenario somewhere because on this one I'm not going to do a credit partner. But it looks like I ran a scenario as if I was, and so I don't know. Sorry if I did this last week, but this deal was newer, I guess, and it wasn't as developed as it is today. Where today it's like pretty much set in stone of how it's going to turn out. But in the past, the way I got past 10 was I would bring in a credit partner and said, hey, so Tamara, let's just say this is you. I said, hey, Tamara, you've got good credit. I've got this deal that buyers already put 125,000 out. So I already bought it. And then in my docs, it says that I can transfer this without buyer's consent as long as whoever I transfer it to honors everything in the contract, almost like selling the mortgage. Go watch Seller Finance Notes by Jeff Armstrong. I basically set these up so that they are sellable to someone like that from the get-go. And I still actually set them up like that just in case. Like, let's say worst case scenario, this one I just bought, the last minute, my lender says, sorry, can't help you. Then I don't want to be up a creek without a paddle. Like, oh, dang it, I can't. I set these up where I could always bring in a credit partner if I had to. And let's say I did. So I talked to Tamara. She's like, yeah, I want to be a credit partner. Then I actually deed the house to Tamara. She refinances it in her name, and now we're partners and we split cash flow. So she might have to bring that $10,000 and go get the loan. And so Tamara's out $10,000 cash and a loan on her credit, but she's getting cash flow. And then I'm also getting cash flow because I basically put the whole deal together. And so that's how I got past 10 the first time. But it was a lot of more work. Because now like I wouldn't worry about Tamara because she's an investor. But some of the credit partners I did deals with, and I still actually have deals with some of these people, they were not investors. They were not, like, some of these people, it was the first deal they'd ever done in their lives. They were not Renata students. They were just, I personally don't like money partnering, if you will, with fellow students as much. I like to go find somebody that's just like, dang, you're like the freaking best thing since sliced bread. Like, this is brilliant. This is amazing. And just like blows their minds because I'm Renatus educated. And let's call it the smartest person in the room versus among fellow Renata students, people are like, yeah, in fact, I'm seeing this in the comments. We're like, this makes a lot of sense because you're Renatus educated. Like, duh, like, yeah, this is in the classes. So maybe just my own cake that I baked, if you will, from the ingredients of the Renatus education, sure. But if you've watched the Renatus classes, you're like, I'm picking up what you're putting down, Dane. This, yeah, I get this. So so with credit partners, like I say, they were not investors first. They hadn't done any deals. And so it was just a little bit more hand holding that I like to do personally. And so I've stopped doing credit partners. I basically just do the DSCR method because technically it is cheaper. The DSCR method is technically cheaper because, sure, my interest rate is more than if I go get a credit partner for a smaller interest rate that's government backed, because government backed rates are smaller or less. But by me paying more money DSCR and not going and getting a credit partner, at the end of the day, it saves me money. And DSCR is unlimited. I can go get tons of DSCR loans. And yeah, correct. I technically get a little more cash flow than if I go get a credit partner by doing it this method. And then I can basically manage all the loans because, contrary to maybe popular belief, like once it's set, the Burr method, if you will, when it's not set it and forget it, like there's maintenance that you have to do on even these darn loans. You get calls like once a year and say, hey, the loan payment is changing. And so you got to go all the way down the line and change, in fact, 'tis the season right now for escrow analysis to come out. And I've got dozens of loans out there like these that all of them change around this time of year. And so we got to like go down the line and change it through, in my records, in my payment processor's records for the end buyer, and changing their payment because taxes and insurance always fluctuate year to year. The rate does not. So it's a fixed 30-year rate and term for my buyer, but taxes and insurance change. Anyway, so sorry, that was off on a, I guess, a rant there, or soapbox, but helpful knowledge. It takes maintenance. And when I had credit partners, they would call me like June and be like, hey, the payment went up and now I'm paying more of the payment and they did not, and they just like complain. I was like, that's your job. Like, you got to tell me if that payment changes. And so anyway, I stopped doing credit partners. But still an option. It is just more maintenance. What's the terms? Somebody in Renatus told me this. Pick your headaches. Credit partners are not bad. They just have different headaches, not headaches that I wanted to babysit, of like following up with all those credit partners and being like, hey, what does it change to? Did the mortgage change? And so anywho, but yeah.
Amazing. I'm so excited to do this now that I finally wrap my head around it. So, and now you involve when you're buying from agents, so do you still, I know you have that strategy. Am I
Sure.
mixing it up? Do you still not, you pay them a set price or you actually have to pay them
Here, let's
the-
show you.
the commission?
So this Repsy, so you guys are sworn to secrecy on names. So there is a
Everyone is sworn
buyer.
to secrecy. By attending today's call, you will not divulge anybody's names or addresses of said deal.
Correct. So there's a buyer and a seller. And if I scroll down here, there is a seller's realtor and a buyer's realtor. And so in this case, because the purchase contract was assigned to me as the buyer, Luana became my agent, and she still got her realtor commission as if the original buyers had bought it. And so Jonathan still got his commission because he was the seller's agent. So he got his commission, business as usual. Luana still got her commission, business as usual. But instead, we also had to do, that's what all these are for, buyer broker. I had to sign one that said Daine Clark. Yeah, here we go. Daine Clark, buyer broker. Or sorry, that's a due diligence, but there's a buyer broker here somewhere. Probably this one. Somewhere. There we go. Exclusive buyer broker. So Luana became my realtor now because I became the buyer. And Luana still got paid her commission, business as usual. Her 2.5% plus 595 broker fee. And so nothing changed. Luana basically was like, yes, Daine, please buy this house, because if you don't buy this house, she probably wouldn't get a commission for years, to be honest. Because if the bank rejected her buyer today because of something financing, that means that if they went and tried to buy another house tomorrow, then the bank would probably say the same thing. And so Luana's looking at this like, yeah, Daine, buy this house for my client, because she gets the commission still today. Her client gets the help that she originally tried to help them get. They get the house. And so all the agents got paid business as usual. This is why I love this. All the agents got paid business as usual today, instead of Luana being like, sorry guys, call me in like a year when you file your taxes with your, updated business tax return, whatever, and then maybe we can try and get you a house. She's like, no, let's get you a house today. Daine's going to help you. And Luana still got paid. And so to answer Tamara's question, yes, agents love this, because you can go to an agent. Here, let me stop the share. You can go to an agent and say like, hey, has story ever happened to you? Basically the story that I just told. Has something like this ever happened to you? Have you been and it's crazy because you can go to the seller's agent, Jonathan. You can go to the buyer's agent, Luana, and ask them the same question. Hey, have you ever been a listing agent, tried to, been selling a house, and last minute they back out because they can't get the financing? And Jonathan would be like, yeah, actually, that's happened to me. This just happened, obviously just happened to him. And be like, yeah, like, and then you tell the story of helping somebody like that. And then Jonathan will forever remember that story that you told him of if that, and then you go to Luana, hey, have you ever been a buyer's agent? And buyer had a good down payment, but the bank, for lack of a better term, flipped them the bird at the last minute. And then you had to pull out of the deal and you couldn't do it. Luana would be like, yeah, actually. And, because obviously it just happened to her. And she'd be like, and you tell her that story, and Luana would be like, forevermore would remember that story. And if it ever happened again, or if she has a friend agent that is telling her a story like, oh my gosh, like we just fell out of contract, maybe somebody at her brokerage or something that where they talk, and that person's like, hey, this is happening to me. And Luana would be like, have you met Daine? and I've done deals like that. And so, see, I had another point I wanted to make that, but didn't want to derail. I can't remember, but regardless, you go to agents and you tell them stories like this, they will remember. In fact, I've gotten, maybe this was it. I've gotten calls from just random people I didn't even know and said, "Hey Daine, somebody said that you can help with this." And I'm like, who told you that? And it's to the point now where the stories that I'm telling are being told and then being told and then being told where someone's like, "Yeah, somebody sent me your name and said that you can help in this situation." I'm like, "Who sent you my way?" And they give me the name. I'm like, "I never heard of that person." Never, but let's help you. And so all I do is tell stories like this from either aspect, from the seller's aspect, from the buyer's aspect to agents, and then wait for them to either have to tell that story to someone else or they run into it, whatever, and all of a sudden we're doing a deal.
Yeah, so I've been telling all the agents that I've already worked with that I'm doing this, and they're all like, "Oh my gosh, I know someone." So it's coming, it's coming. So my other question is, how do you do your due diligence before? Like, I know you don't really go to the deals, but I heard you say you get an inspection. Are you like I have a deal right now that is coming my way. They're asking 200. I could probably get it for less. The ARV is about 260 and it needs about $10,000 worth of repairs. Do you send contractors? Do you just get inspections? Do you do some of the repairs? I'm just curious to get your take on that part.
So back to the I'm trying to act more retired. I actually don't hire contractors anymore. And so on a deal like that, I probably wouldn't even do personally because of what you're saying. Like there's, pick your headaches basically. Contractors are one of the headaches I don't want to have to deal with. And so a deal like that, I'd probably just pass on to someone else and be like, "Hey, do you want to do this?" But it doesn't mean it's not a good deal. It's just, like I say, I'm trying to act more retired, if you will. And so I don't have to deal with contractors anymore.
But okay, but like when you
But if I did, then I would treat this like a fix and flip, because like to your point, the house needs a little bit of work. You can buy it very well discounted and turn around and sell it. Technically, a deal like what you're saying, you would make more money. Like your numbers would be more sexy than my numbers, because you buy it low. You basically your 10% spread, or sorry, my 10% spread, you blow out of the water, because if you can buy it for less than 200, turn around and sell it for 260 on seller financing, there's your spread. You don't even have to negotiate any spread. You already negotiated it from the seller because you bought it so deeply discounted. In fact, if you saw on not this Monday, but previous Monday, Renata's class, Invest Edge, I talk about a deal like this exact scenario that Tomorrow's talking about, where we bought the house for like $187,000, fixed it up for 30 to 40 grand, and sold it for $420,000. So huge spread, massive spread, because it was basically a fix and flip that we turned into a fix and flip to seller financing situation. And so yeah, and those numbers are like insane, infinite returns, cash like $97,000 richer at the end of the day, and like $500 or $600 cash flow. So infinite return basically. And so yeah, you can do deals like that and you can blow my numbers, my 68% cash on cash return. You can blow my numbers out of the water with the scenario that you just gave Tomorrow.
So are you just doing inspections now?
Yeah. Yeah. So let's say I have, or in fact, the house that we just did I've got an inspection report somewhere. I've got it here in the file. But yeah, so had an inspection, was like, yeah, I mean, the house was fixed up already. It was nice inside. It was basically like somebody had fixed and flipped the house. And where's my inspection report? Somewhere. But yeah, and I tell my client, like, let's say I'm going to do one where I buy and sell it immediately like that, and I'm never even going to see the house. Like I'm only going to have, let's say, possession of the house for like 10 seconds because I buy it and sell it the same day. In a case like that, I make sure I disclose to my buyer and say, hey, I'm not going to do inspections and due diligence on this house. That's your job, because I will own this for all but 15 seconds, whatever. Because you're like, the day I buy it, you're moving in. Like, I'm not even going to get the keys. I'm going to have the realtor give the keys directly to you, because I'm not buying this house for me. I'm buying this house for you. And so you need to be doing your due diligence. And I'll tell them stories like, yeah, I had one where somebody said, okay, yeah, Daine, whatever. And they didn't do anything. And the sewer ended up being settled between the house and the street. In between, the sewer settled. And so there was like a U, and that was a $17,000 bill. And the buyer had to pay for that because they were the owner. They were buying it from me. I was just the bank. And so I tell them, like, you need to do your due diligence. I would do, if you are not a contractor yourself, I would do an inspection. If there are trees that are taller than 10 feet in the front yard, I would do a sewer scope from the house to the street. If I'd call roofers. Anyway, I'd do a full-on inspection, full-blown inspection if I was you. And I tell them that. And I tell them that story of like, do the sewer scope if there are trees in the front, because I've seen too many. One is too many. And I think I've seen 3 scenarios in my real estate career of sewers gone bad, maybe even 4. Anyway, too many to not say this is important.
And do you get the inspection report?
Yes. Yep. I get it. If so, like you're saying, if I tell them go get it, then yes, I
Yes.
also get it as well. I just ask them for a copy.
Yep. Hey, I have a quick question. How long do you say that you do this immediately? In the past, I've heard you talk about that you have a certain amount of time that they have to do the lease option or the in order to get the bank financing on your end done.
Yeah.
And
So
not be penalized.
Yeah. So here, let's do this. You're saying for them to be penalized or for me?
For you to be penalized on your loan, right? You paying them too
Oh
early?
yeah. That's right. So here, let's do this. Lease agreement. So let's see when I built this. On 12/20. So if you remember, the settlement deadline was 12/23, and so this was just 3 days before closing. That here is a lease agreement from Daine or LLC, Daine LLC, to the buyers that says that we will do this lease option for 24 to 27. And I just do that so that banks, because nowadays with DSCR, I used to only do these for 1 year. Let's see, maybe it's 2 years. And I just do this to make banks happy. But now that I get DSCR loans, I can go anywhere from a 1 to a 3-year prepay range, where a 1-year prepay I spend more interest. A 3-year prepay I spend less interest. And so I asked the buyer, like, hey, when do you expect to try and refinance this, if at all? Like, is that your goal, or are you going to try and refinance me out at some point? And so I just do whatever that is, 3 years, so that my bank, even if I did a 3-year prepay, would see this and be like, okay, yeah, and they wouldn't even bat an eyebrow. However, we are going to execute this sooner than this. We'll probably do it. In fact, on this one, we'll probably, if I'm going to refinance this week, we'll probably execute on this lease option, like maybe even before the end of the month. I mean, we're only February 5th. Yeah. So maybe even before the end of the month. This was just in place so that I can refinance it like I am right now. Because if I sell or finance this first, the bank won't refinance me out. I want to refinance it. And so I think, does that answer your question, Doug?
So would you have to pay Daine, the commission to the mortgage loan officer because it's before 6 months?
No, because we're leaving the loan in place.
Oh, I see. Okay.
We're just executing the lease option to do the
Oh,
contract for
okay. I
deseller
thought you said
financing.
you were refinancing it. Okay.
Yeah, no, so I'm refinancing my hard money loan out right now.
Oh.
So here, let's see. I when I bought this, let's see, right, loan docs. So when I bought this, I got a hard money loan. Let's see, where's the note? Yeah, trustee note. So I got a hard money loan. So my company borrowed money from hard money. So here's the lender. We actually built a unique trust in order to be the lender. And so I am currently refinancing this loan that I got from myself. But doesn't you don't have to own a hard money company to do this. You could go get this from anybody. You could go get this from mom and dad. Any human that wants to lend money on real estate could be inserted in this name right here. And so my company got a hard money loan from the trust, and I'm currently refinancing, rate and term refinancing this loan into 30-year long-term, whatever. And so once that's done, again, hopefully this week, maybe next week at this point, because DSCR, like if we get a loan approval, usually it takes them a few days, and so I might close like early next week. But yeah, so I'll refinance this into a long-term 30-year mortgage, and like I said, I locked my rate in at 7.125. I mean, I'm paying 10% on this hard money loan, but yeah, and so once I refinance that, we will execute on said lease option. Whoops. So execute on this lease option that me and the buyer have entered into, and we will execute the purchase contract. So here is my purchase contract from Daine to buyer for the 370 that we talked about. They put $125,000 down in earnest money on this purchase contract. Also, same dollar amount on the lease option. And I think on here we put, let's see, we would close by December 23rd, 2025. But like I said, we're going to close way early on this. We'll probably close either this month or next on the seller financing portion of, that's why I call it phase 2. Right now we're in phase 1, lease option. I'm rate and term refinancing. As soon as I refinance, we will do phase 2 where we execute this seller financed. In fact, here's seller finance is down here. Seller finance addendum to contract for deed. Here's all the terms. 9.375% interest, payment to 2037. First payment is, let's see, I should say it here somewhere. Basically today. I don't know. It's here somewhere. First payment. I swear it's on here somewhere. Anyway, first payment is basically February 1st. And we'll execute this, doing the contract for deed. If that makes sense.
So what you're doing, are you doing lease options into seller finance, like 2 years and then seller finance, or straight into seller finance?
So in this scenario, I never want my client to feel like they got bait and switched. And so what I tell them is like, hey, I'm doing this lease option so that I can refinance. Because you guys want me to close like, I mean, I just met you and this is crazy. Here's my number. No, just kidding. So, sorry, it just popped in my head. So I said, I'm going to buy this cash because you guys want me to close like tomorrow or like in 2 or 3 days, whatever. So I'll buy it cash and I will refinance it immediately. I cannot refinance it if I have already seller financed it. So we're going to do phase 1 lease option, phase 2 purchase contract. The only reason we do that is so that I can do that said refinance and I can close in like 2 days or 3 days, whenever it was. Let's see, because my Repsy started on 12/20 and then we closed on 23, so 3 days. I was like, I can't get my mortgage loan officer to close in 3 days, so I'm going to buy it cash, hard money. Now, phase one, lease option, and then phase two, seller finance. And so remember your question one more time, Tamara, because this was the context I needed to give in order to answer your question, I feel like.
Yeah, no, perfect. So, and how long are you going? Are you in lease option before you go into seller finance?
Oh, that's right. That's right. So I was talking about bait and switch. So I never want my clients to feel bait and switch. And so I tell them, hey, phase one, phase two is, phase one, phase two, lease option, seller finance. I'm actually sending this to, in fact, here, I think I stopped sharing my screen. Let's do this. So I'm actually sending this to the payment processor. Look, so contract service agreement, elite contract service, original loan balance, whatever. I send this to my payment processor and say, hey, first payment will be on January 1st, $0, but then because we closed in December, and I gave him a freebie and said, hey, no payment due in January. And so payment picks up in February. And this is all automated now. Like this, the system has to do it like this. Anyway, side note. And so I tell him like, hey, I am not bait and switching where, oh, your first payment is rent. Your second payment is rent, or the first year is rent. I say, no. I'm sending this to Elite Contract Service today. Payment number one on February 1st will be amortized. You are building equity from day one, even though technically we're still on lease option. I have instructed Elite Contract Service to begin amortization from the very first payment. And so for my buyer, it doesn't really matter if we go 4 payments on a lease option, 10 payments on a lease option, 12 payments on 30 payments on a lease option, doesn't matter. Elite is amortizing this from the first payment and on. And so let's say we close, like let's say we ended up doing the contract for deed on this like in June, and they made February, March, April, May, June payments. And so they made 5 payments. That seller finance REPC, we would change an addendum to basically say, hey, the balance is not 245. It is 245 minus the 5 months of amortization. It's probably like 244. You guys have seen amortization charts, like very, very small in the beginning, but still, my client feels like they're being taken care of because it's not like, hey, you paid rent for this many months, and so when we do the seller financing, it's still 245. No, they get the amortization from day one, regardless, because I want them to feel like they're being taken care of. I don't want them to feel like bait and switch like that. Like, oh yeah, I had to pay rent for this many months. But yeah, and I just do that.
And are you vetting the people buying, or or is it just like, how are you vetting the
kind
people?
of, yeah, kind of know. Like I like to know what do they do for work, where did they get the money? So where they get the 125, and so like in this case they just saved it up. How much money do they make per month? But I don't go like crazy because I'm not a loan officer, so I can't be like, oh, send me your credit report, or let me pull your credit report. I'm not allowed to do that because I'm not a loan officer. And so my vetting is usually like, do you have the down payment? Yes or no? How'd you get it? How do you generate your monthly income? And how much do you make on your monthly income? Okay, great. Sounds like you can afford this. And I'll even say like, hey, here's what the payment's going to be. Can you confirm and tell me that you can afford this monthly payment? Yes. Okay, great. And so that's for the most part of my vetting. Mostly I'm vetting the house. Outside of that, as my loan to value in a situation, they put 125,000 down. If they stop paying, could I turn this into lemonade if I needed to? And obviously the answer is yes. If they stop paying, let's say they didn't even pay the first payment, period. That's due today, basically. Let's say they never even pay it. Could I turn this into lemonade still? Yes, I could.
How would you do that?
Depends on if they would talk to me. If they were openly communicating with me and say, yeah, we know we didn't make the payment, we're this and that, whatever, but we can make it by the 15th. I said, okay, there will be a late fee by the 15th, but go ahead and pay, whatever. And, you know, so depends on them. If they say they're going to try to make the payment, then I usually give more grace than not. Let's say they're like, oh yeah, sorry. Yeah, because I think it's late after today, technically. I like my deadlines to be pretty quick. In fact, here, I think it says it right here. Late. Let's see, where is it? 5-day grace period.
Oh.
Right there. So 5-day grace period. So basically it's late if they pay tomorrow. So they can pay by the end of the day today, and it's either $150 or 10% of the payment, whichever is greater. So their late fee would be like $230. And so let's say that they didn't pay by tomorrow, and they had their story, then I'd say, you know what? If you could pay by the 15th, I will go ahead and waive the late fee because this is your first payment, and we're figuring things out, getting stuff. You know, this is the first for everybody. And it helps people, I don't know, feel taken care of, if you will. But then I'll come back and say, but if it's not in by the 20th, I do have to charge the late. And so I'll do stuff like that where I'll work with them, and I don't know, I hate saying put the carrot in front of them, but yeah, and I've had some people say, oh, I can't make the payment this month, but they've made like 10 payments in a row and done just fine. Then I might come back and say, oh, you know what? You've had 10 payments in a row. Great. And if you tell me I can't make the payment, this doesn't happen very often, but let's say you come back and say, I just can't make the payment this month. Then I'd probably be like, hey, for all the good times that you've been on time and stuff like that, how about I just give you a one-time payment skip, and I put it on the back end, and, you know, effectively modify the note, if you will. And Elite will let me do that, where I'll say, hey, no payment in November this year, whatever, and just add that $2,358 to the back end, to the end balance, if you will. And so I like working with people as much as I humanly can. But in the moment that I can tell that somebody is taking advantage of how nice I'm being to them, that's when I do have to, I don't know, put on the bad cop hat, I guess, if you will, and say, like, hey, if it's not this, then by this date, then I have to charge a late. If it's not this by this date, then I have to have the attorney send you a letter, and that attorney charges like $400 or $500. And so not only do you have to make up for the payment, the late payment, but you're also going to have to pay the attorney's $400 fee to bring this current. And the attorney is on autopilot to do it by like the 20th of this month. And so if you can pay before then, you can waive all of that. And anyway, so that's basically how I choose to do this. It makes people feel taken care of way more, way more. But yeah, so let's see. Roseanne says that let's see, my mom has tenants that didn't pay for a year, and it's difficult to get them to move out of the. Yeah, I would, if it goes past 30 days, then it's like past 30 days, no questions asked. They're gonna get a letter from the attorney. In a nice way, you know, basically the way I just said it. Hey, like if you can't pay by the 30th, the attorney's going to send a letter, and at that point, it is going to cost $400 to pay him off. And so, let's say we're 30 days late, then you're going to have to pay February's payment and March's payment and a late fee and the attorney's fee. And anyway, does the payment include taxes and insurance? Yes. Yep. So right here, taxes and insurance. And then Elite charges $30, and notice that I don't pay that $30. Elite is free to me. I don't pay Elite anything, actually. Elite is free to me, and my buyer pays that $30. And so this includes principal, interest, tax, insurance, Elite fee, everything. Yeah, great question, Scarlett.
What is the and this is so how do you keep track? Do you have a system that keeps track of what rents come in and when they come in?
Yes, Elite does it all. Oh, sorry, Roseanne, I didn't see the last half of your question. So she says this has happened twice to two different tenants. It was so rough. How do you deal with that? I guess I kind of answered that, where if we're into the 20th of the month, if they're communicating with me and telling me, yes, we can pay by this date, I say, okay, cool. If you can pay by this date, then I'll waive the late fee by half or something. You know, I like to give them deadlines in a nice way. Like I'm not demanding in any way. I say if this, then that. If you can pay by the 20th, I'll waive the late fee entirely. And then because I know that you know, again, let's just talk for February. I know March's payment would be only be 10 days away from that, and I would rather you be able to pay March's fee. And so if you can pay by the 20th, then I'll waive the late. This is on like in a first offense. If they are on the 20, I wouldn't do this over and over and over. Yeah, I'm not dumb. That would be taking advantage. But I'll usually say things in a very, very nice way like that, and say like, okay, if you pay by the 20th, I'll cut the late fee in half, something like that. Um, but I'll tell them, if you go 30 days late, I will be forced to hire the attorney. And the attorney, you know, it doesn't mean that the attorney's going to take the house, or let's say in this case, tenants, if you're a landlord, that doesn't mean the attorney's going to kick you out yet. He's just going to send you a letter that says, hey, we understand you're late, and it could be this many days until we could go get the judge to get you out of the house. And you will have to pay off the attorney's fee just for him to send that letter. And so I'm just letting you know that you know, this is when that letter is, you can expect that letter, right? I basically just set the expectations. If you don't pay by this date, you can expect a letter by this date, and then you'll have to pay off the attorney. And so I actually had one, this is probably a little over a year ago at this point, where, in fact, yeah, it was about a year ago, where it was like, she didn't pay October. Let's see. Yeah, she didn't pay October. She didn't pay November. And so I started hiring the attorney at that point, and the attorney, you know, started sending some letters. And or no, I'm a month ahead. She didn't pay November. She didn't pay December. So she started receiving letters from the attorney in December, and the attorney was, you know, and I just basically just said, oh, you're going to receive it, and then she received it. I was like, if you receive it, then you do have to pay off the attorney. So here's the total amount to pay off. And then once she received the letter from the attorney, it was like, hey, the attorney is going to go ahead and schedule with the courts by this date. And so here's how much you need to catch up. She needed to catch up November and December, plus the attorney's fees and the late fees for both November and December. And so I think we were scheduled to have the attorneys start scheduling with the court like January 1st of last year. And this gal had put like $127,000 down on this house. And so as we're, you know, she's 2 payments behind now, the attorney's doing his thing. And the attorney was like, yeah, we can schedule for January 1st. And I relayed that to my buyer. And she, on December 31st, she caught everything up, paid the attorney fee, paid the 2 late fees, paid the 2 payments, caught everything up by that date. And I was so nice about it the whole way. Like, I wasn't angry. I wasn't, hey, I've got to pay, whatever. I plan for stuff like this, meaning if I have somebody that doesn't make a payment, I keep enough cash in an account. Yeah, story for another day, I guess, but I try to live on this much of what I make. If I make this much, I still only spend this much, which means I can save money. Like, I'm trying to make saving money cool again, I guess, because I always hated it as a kid, you know, learning, oh, save money. I always hated it. Like, no, make saving cool again, or something like that. We gotta come up with a funny slogan for that. But I purposefully make sure that, hey, if they don't make a payment, I can still float the payment myself for this many months. And I let them know stuff like that. That's part of my conversation, is like, hey, I just made the payment today. I know you didn't, but I'm floating it now. You know, just adds to that, making things kind of personal. And like, hey, like, I can't just let you live here for free. And so you know, if you don't pay by this date, you're going to receive that letter anyway. And so it got him to pay it up. And so, yeah, anyway, great question. always nice. Just set expectations. Hey, if you don't pay by this day, I have to hire the attorney, and you're going to receive a letter from the attorney. They receive a letter from the attorney. Oh, if you don't pay by this day and pay out the attorney, the tenant disappeared, never showed up to court. So yeah, so you probably got awarded, kept their deposit, that kind of stuff. Anyway, sorry, we're past 9:30, so I gotta jet. But great questions today.
Oh man,
Okay.
I'll
This
have
helps.
more for
Yeah,
you
wonderful.
next week. But I'm working on this deal right now, so hopefully I'll have progress before.
Cool. Yeah, keep me posted. That's awesome.
I will. Thank you so much, Daine. You have been like so helpful.
Totally.
I
Yeah,
can see
Pat-
him. You
Cool.
gotta be the next instructor.
Pat was,
I don't know.
Pat had a quick question if you got one extra second.
Yeah, go ahead. If it's a quick one.
I'll catch it next week. It's okay, Dane. Thank you.
Awesome.
Okay, no worries.
Perfect.
Have a great
Okay.
week.
All right, love you all. Take care. Go have conversations.
Go have
You know how it
Thank
conversations.
goes.
you,
See you
Daine.
at
Thank you,
nationals.
Michael.
Bye,
Peace.
Thank you,
everybody.
everybody.